So may I start?
Yeah, you can start definitely. Just a
Good
sec,
morning.
just a sec, just a sec, just a sec. Let me check whether. Okay, you can start.
Good morning, everyone. It's already 11:34 and it's time for lunch. And let's be honest, some of us probably have skipped breakfast too. But no worries. Today, we Group 1 are here to talk about Swiggy, the app that is already ready to satisfy your craving.
So Ananya, you take early lunch or what?
Sorry?
You
Sorry?
take early lunch. Let,
No, sir.
no, you
We
said it's time for lunch. You said, na, to start with.
Yes, sir, because I've skipped my breakfast and it's time for lunch for most of us at 12.
Yeah, yeah. Actually, I also take around 12 o'clock. So and fine. I think you're in your campus also the lunch will be starting at 12. Okay, go ahead, please.
Yes, sir. So, sir, from quick food deliveries to grocery at your doorstep, Swiggy has become India's go-to platform for all things delicious and convenient. Since its launch in 2013, Swiggy has grown into a market leader, operating in over 650 cities with a large network of 190,000 restaurant partners. With services like Instamart for ultra fast grocery deliveries and its foray into dining experiences through Diner, Swiggy has redefined convenience for millions. Let's look at into the timeline. The next slide. Swiggy journey began in 2014 with the launch of food delivery services, making it entry as one of the first hyperlocal commerce platform in India. Over the years, Swiggy expanded into 653 cities, serving 13 million users through a wide network of 196 restaurant partners. In 2020, Swiggy pioneered with a quick commerce with the launch of Instamart, offering on-demand grocery and household items in 10 to 15 minutes. By 2022, Swiggy diversified into out-home consumption through the acquisition of DineOut, enhancing dining and event experiences in 43 cities. We will look into the financial 24 overview, but we will delve into the financial later half of the presentation. The
Okay,
next
Ananya,
slide.
just hold on, just hold on. Yeah, I'm back, so we can start.
Swiggy Financial 24 overview. Swiggy has demonstrated impressive growth in financial year 24. 14 million users transacted on the platform with a frequency of 4.5x per month, supported by a delivery network of over 390,000 partners, and its earning before interest, tax, depreciation, and amortization profitability was achieved within 9 years of inception, and making it one of the few global leaders dining platform to do so. Further on the food delivery segment, the next slide. The food delivery segment continues to grow with a 1.1x expansion in both the user base and restaurant partners. Total order grew by 17% year on year, driven by an increase in user frequency and high average order value from premium offering and large market sizes. Whereas for quick commerce, Swiggy Instamart has scaled to nearly a third of the food delivery business in just 3 years, and it is operating in 27 cities through 523 active dark stores.
So quick commerce is basically like Blinkit, is it?
Yes, sir.
Okay.
Swiggy Instamart, basically.
Swiggy?
Instamart.
Oh, Instamart. Okay. And the third one is out of home consumption.
That is Dine Out acquisition of Dine Out through Swiggy app
Okay.
itself.
Okay.
So
Fine.
Swiggy Instamart is operating in 27 cities through 523 active dark stores. It offers a catalog of 17,000 SKUs. And out of home commerce is the
Just
acquisition of
stop. I
Dine
mean,
Out.
I couldn't get this out of home consumption. You said these are the restaurants where you go there and uh,
So basically, from the Swiggy app, you can book your table and all.
Okay.
So Swiggy earns its revenue through commission and advertising, user fees, and sales for events.
Okay, so that means you can book I mean, a table in a restaurant using this app, isn't it?
Yes, sir.
Okay, I got it. I got it. Yeah, got it.
So for the growth and innovation, the next slide. Swiggy innovation-led culture is the backbone of its success. Recent initiatives include Swiggy Jenny, that was launched in 2020, an on-demand product pickup drop service for users, availed for sending a product from one point to another within a city that has a presence in 68 cities. Whereas Swiggy Minis is a SaaS platform designed to empower entrepreneur, creators, and services provider by allowing them to create a free, no code website with 0% commission and no onboard charging. Whereas Swiggy Mall is an extended SQ offering now integrated into Instamart, which is blending traditional e-commerce and quick commerce. Whereas Handpicked is a curated collection of gourmet and local offering, enhancing Instamart's appeal. So we will move on to the IPO segment.
Okay, so the handpicked is also basically of Swiggy, isn't it?
Yes, sir.
Okay, okay. Because I was not aware we were using the services, but I thought it was a separate organization. Okay, that's good. Fine. Go ahead.
So this is the overview growth that I spoke in the
Okay,
previous slides.
sure.
Dhruv, can you move to the next slide? Okay, so now we'll talk about the key IPO details of Swiggy. Swiggy IPO was a book built issue of 11,327 crores, which consisted of both a fresh issue and offer for sale. Swiggy issued fresh shares seeking 4,499 crores to invest in its subsidiaries, technology, brand building, and pursue inorganic growth.
So
Additionally,
Niyashi, just hold on, because I, Navya, Ananya, and Janardhan and other Nishi, you were the part of this group basically earlier, or you joined them later?
me,
Yeah.
I was a part of this earlier as well.
Okay, okay. So, ठीक है. After this presentation is over, I would like to see your videos. Okay, fine.
Oh,
So
yes.
after the this is over. Okay, so okay, fine.
Okay.
Yeah.
So additionally, the company also issued an offer for sale to sell 15.51 crores of existing shares. The IPO price band was set at 371 to 390 per share, and the issue includes a reservation of about 75,000 shares for employees, which were offered at a discount of rupees 25 to the issue price.
Just hold on. I just missed out. So Swiggy IPO is a book built issue with 11,000 crores. So issue is a combination of fresh issue and 4,000 for offer for sale. Okay.
Yes.
So this offer for sale basically was going to whom basically the promoters or some big shareholders.
No, so promoters were basically selling their shares.
Okay, fine. And this money will go to them basically, isn't it?
Yeah.
Okay, then Swiggy IPO price is in the band of 371, 390. The minimum lot size of an application is 38 shares. The issue includes reservation up to 7 lakh 50,000 shares for employees. Okay, now this IPO price band of 371 and 390. So
Yes.
what is the rule regarding that as per SEBI? The band should be in what this thing? What should be the range of the band? Any idea? I mean,
No, sir, sorry. I didn't get your question.
I'm saying it's like 371, 390. So can they fix 371 to 450? Is there any regulation regarding the bands, the
So it
price
should
band?
be 20%.
No, I was asking Niyashi anyway. So 20%. Okay, it should be maximum can be 20. What should be the minimum, Niyashi? Any idea? Janardhan?
Yes, sir. It should be 5%.
Absolutely, it should be 5%. Okay, so it can be, like 5%. Now you have checked anyway, you should be aware of that. Okay, fine, it's fine. Go ahead, please.
Yes, sir. So the book running lead managers of the IPO are mentioned on the slides, and Link in Time India Private Limited was the registrar for the issue.
Okay,
Dhruv, can you move on? So these are just some of the key IPO details.
okay. Book built
And
IPO, total issue size, price band was this, lot size 38. Okay, fine. Go ahead.
okay, so now let's just discuss the timeline briefly. The Swiggy IPO bidding process started on November 6th, 2024 and ended on November 8th, 2024. The allotment for the IPO was finalized on November 11th, 2024, and on 12th, the refunds were initiated and shares were credited to the demat accounts. The shares then got listed on BSE and NSE on November 13th, 2024.
Okay.
Okay, so the IPO allowed investors to bid in lots, starting with a minimum size of 38 shares. The table shown depicts the minimum and maximum investment by retail investors and high net worth individuals in terms of shares and amount. And
Is
the
there any
invest
limit for the retail investors?
yes, up to 2 lakh.
Okay, fine.
Yeah. And the investors could bid in increments of 38 shares above the minimum, and the maximum limit varied on investor category as mentioned on the slide.
Hmm.
Moving on, for the IPO, the eligible participants included general investors and high net worth individuals with specific limits for application amounts for each category. So, for general investors, the maximum amount was 2 lakh, and for high net worth individuals, it was 2 to 5 lakhs.
Okay.
Next, we'll talk about the promoter holding. The pre IPO shareholding of the promoters were 63.56%, and after the issue, they had a reduced stake of 52.97%.
So,
And
Nyashi,
the
what should be the minimum, I mean, promoter shareholding as per the SEBI? Like, it was like 52.97. Suppose it was 10%. Will it be acceptable?
um, I think the maximum is 75%, but there's no minimum. I'm not
Okay.
sure.
No, it is minimum, that is the 20% is sort of, they should have at least 20% stake.
Okay.
Okay.
All right.
Fine. And of course, it varies depending upon the size of the company. But the general rule is 20%. Fine. Go ahead, please.
All right. So the moving on, the we'll talk about the investors, anchor investors now.
Of course, when you said 75%, the promoters can go up to 75%, okay, not beyond, because after that delisting is required, okay, because
Yes, so that's
at
the
least 25%
maximum.
should be the public participation. Okay, go ahead.
Okay, moving on to the anchor investors. So, as we know, anchor investors are typically large institutional investors which are allotted shares before an IPO opens to the public. The anchor allocation process is crucial to the IPO as it helps in price discovery and builds confidence among retail investors. This strong response from anchor investor often sets a positive tone for the public issue and can influence the overall subscription levels. For the Swiggy IPO on 5th November 2024, the bidding for anchor allocation was completed and there was a robust response from the anchor investors. A total of 13 crore 3 lakh 85,211 shares were allocated to around 151 anchor investors, and around 44.88% of the total IPO size was subscribed by these investors. This aggregates to a transaction size of 5,085 crore. This strong response indicated confidence in the IPO. For the anchor investors, the allocation was done at the upper price band of the IPO of rupees 390 per share. The lock-in period for 50% of the shares was till 11th December 2024, and for the remaining shares, it's till 9th February 2025.
Mhm.
So the shares that were allocated to the anchor investors were reduced from the original uh, quota allotted to QIBs.
Okay.
Okay, so
So
Dhruv,
tell me one thing. Were you aware of all these terms before this course was done? I mean, all the QIB and anchor investors. Have you studied this on some other this thing subject?
no, so I was just aware of like retail investors and employees getting shares, but these terms were new.
Okay, so all these terms were new and you were able to, I mean, understand them easily, isn't it?
Yes, sir. When I looked at the RHP now, I was able to understand what it meant.
Okay, sure. Good. Go ahead, please.
Okay, so now we'll look at how the total IPO amount was divided between different investor categories. So, for qualified institutional buyers, which are financial institutions, banks, FIIs that are registered with SEBI, they were allotted 30% of the total IPO size. And during the IPO period, they were oversubscribed by 6 times. Non-institutional investors are retail investors, high net worth individuals, NRIs, companies who bid for shares worth more than 2 lakh rupees, but they do not need to be registered with SEBI. These non-institutional buyers were allotted 15% of the total IPO size, and they were subscribed 0.41 times. Now, retail investors are individual investors who apply for up to 2 lakh rupees, and these were allotted 10% of the total IPO size, and they were subscribed 1.14 times. And lastly, employees who have a reserved quota in the IPO were allotted 0.25% of the IPO size and were oversubscribed 1.65 times.
Okay.
Okay, now we'll move on to the objects of the issue. So the first objective of the issue was to invest in the subsidiary Scoot C for repayment of their loan. The material subsidy had entered into many financing arrangements, and the company planned to utilize 137 crores for this purpose. Then the
So what
second
is this
purpose.
company doing, Scootsie?
So it's basically the part of Swiggy that looks after quick commerce. So their main investment is in dark stores and financing the fixed cost that is there.
Okay.
Yeah, so they launched it for expanding into the quick commerce segment. And the second purpose is to further invest in this subsidiary for expansion. And Swiggy plans to use 982 crores to set up dark stores and make lease payments for the same.
Okay. So is
Um,
this your final semester, or there is one more to go?
so we have 3 more semesters left.
Okay. So you are in the which fourth year, isn't it? Third year.
No, third year, yeah.
Third year. Okay. Fine.
Okay. The third object of the issue was to invest in technology and cloud infrastructure. The company aims to further innovate and improve the technology to enhance the platform experience and offering for all users as well as partners. And they plan to invest 586 crores for this purpose. Next, we have brand promotion. The company from time to time has entered into arrangements with various media agencies, service providers for availing services such as media planning, buying advertisement space, campaign management, etc. And for this, the company plans to invest 929 crores. Lastly, with the additional surplus of funds that they get, they plan on funding inorganic growth and general expenses. They will deploy the balance of funds for general corporate purposes, including meeting operating expenses, initial development costs for various projects, and marketing, and for any unforeseen circumstances that might come up in the future.
Okay.
Now we look at how these objects align with the strategic priorities of the company. So Swiggy's allocation of IPO proceeds appear to align well with its strategic priorities, and it reflects on both immediate operational needs and long-term growth. So, firstly, market leadership. Swiggy is a tech driven platform, and its success depends on its ability to handle high order volumes efficiently and provide a superior customer experience for its users. By investing heavily in technology and marketing, Swiggy aims to strengthen its position as a leading player in the food delivery market.
Okay.
Next, operational efficiency. Swiggy plans on reducing debt and enhancing infrastructure, which are critical steps towards achieving greater operational efficiency and profitability. By reducing debt, Swiggy can improve its financial flexibility and allows itself to invest in growth without being burdened by interest costs. This is critical for the company as it has traditionally operated in a very capital intensive sector with thin margins. And lastly, we'll talk about growth potential. So, Swiggy is also following its goal of expanding into the quick commerce segment by heavily investing in dark stores. The quick commerce segment, which is Instamart for Swiggy, is a high growth segment that Swiggy has been aggressively expanding since 2020.
Now
And the
tell me, what
market.
is this dark stores?
So basically, when you opt for quick delivery, the Swiggy and Zomato, these companies have various warehouse type stores across the city. So whenever you ask for a delivery, the delivery people just collect the items from dark stores and deliver them to you.
Okay. So that is the place from where they store all the goods, basically from there.
Yes.
Okay.
Okay, and this quick commerce segment represents a significant portion of the company's future revenues.
Okay.
Okay, so lastly, we'll talk about the basis for the offer price. The offer price for Swiggy was based on a multiple of things, and I'll talk about a few quantitative factors. The first being EPS, which is a critical factor which determines the IPO's offer price as it indicates the company's profitability on a per share basis.
Hmm.
Swiggy has a negative EPS, which indicates that it has been operating at a loss over the past few years. However, this is very typical for high growth startups that prioritize scaling over immediate profitability, and especially in a sector like quick commerce and food delivery, which is highly competitive and not that profitable.
Hmm.
Next is the PE ratio, which talks about how a company's current share price is compared to its earnings per share, and it's a widely used valuation metric that measures the price investors are willing to pay per unit of a company's earnings.
Hmm.
Next, we compare this PE ratio to other companies in a similar industry, and here we're comparing it to Zomato. Next is the return on net worth, which is a financial metric that measures the profitability of a company relative to its shareholders' equity and basically indicates how efficiently the company is using the capital contributed by its shareholders to generate profit.
Hmm.
And again, Swiggy has reported a negative return on net worth, but again, since it's a loss-making company that uh, is focused mainly on growth and expansion in current times as well as customer acquisition, this is very normal. Next, we'll talk about the net asset value per equity share. Again, this is a financial metric that represents the net worth of the company per outstanding equity shares. And this indicates how the book value of the company's equity available to shareholders is often used as a baseline for evaluating the value of the company's shares.
Hmm. So
And
are
last,
you a finance student or a economics major?
so I'm a BMS major, like
It's a BMS.
management finance,
Okay,
yeah.
fine. Okay, good.
And lastly, we compare the financial metrics of Swiggy with its listed industry peers. Again, in this case, it's Zomato. And this is what I've got from the RHP, and we'll be elaborating on this in the later half of the presentation.
Okay.
Coming to the market sentiment analysis, Swiggy's IPO has been a closely watched event, especially in the competitive landscape of the food delivery and quick commerce sectors. Here's a detailed breakdown. First, coming to the pre IPO sentiment, the grey market premium stood at Rs 20, suggesting a moderate 5.13% premium over the upper price band of Rs 390. This indicated cautious optimism among investors. Analysts expressed concerns about Swiggy's profitability challenges, negative cash flow, and competition, which led to a muted pre IPO buzz. Coming to the analyst predictions, analysts expressed concerns about Swiggy's profitability and competitive pressures. However, they highlighted the company's leadership in food delivery and quick commerce, advising a long term perspective for potential investors. Next slide. Talking about the subscription trends, first day bidding. As of 12 p.m., the IPO was subscribed just 0.07 times
Okay,
with one.
Navya, just tell me from where you got these numbers, the first day bidding, final subscription. Did you get it from, ChatGPT or some other place?
Sir, first I read the RHP, like if I get some any
Okay.
information,
So in
but then I
RHP, it
did
is given. I mean, what is the first day
no,
bidding?
no, sir. It
Ah,
wasn't given because subscription ka nahi hota.
hmm.
Then, sir, I googled. There were many articles from SBI investors,
Okay.
Benzimart, and many more. I'll give the sources anyway.
Okay, no problems. I was
These are
just checking, because most of the students have given, information with regard to, the subscription numbers, the first day and the last day, and how the trend was. So this was available basically at multiple sources, and you picked up from there, isn't it? You said.
yes, sir. There were many articles based on it.
Okay, okay, fine. Go ahead.
Yeah. So as of 12 p.m., the IPO was subscribed just 0.07 times with 1.1 crore shares bid against 16.01 crore on offer. So here was a breakdown. QIBs just bid for 532 shares out of 8.69 crore. Retail investors also just 0.03 times, 0.33 times. Non-institutional investors were just 0.03 times, and employees portion was 0.48 times subscribed. Coming to the final subscription figures, the IPO eventually picked up momentum, closing with an oversubscription of 3.59 times. QIBs led the charge with 6.02 times subscription. Retail investors subscribed at 1.14 times and NIIs at 0.41 times. The employee portion stood at 1.65 times. Notably, QIB participation on the last day was pivotal to the IPO success, while retail and NII investors remained relatively subdued, reflecting skepticism among the higher net worth investors.
Okay, and Navya, just tell me, how was this subject according to you? Was it, gave a lot of information to you, or is it was, how do you assess the subject basically? What you have read, merchant banking.
Yes, so this subject taught me many things that I hadn't studied before in finance. We were studying basic finance courses like ratios and all. This was more detailed into IPOs and foreign exchange. I haven't read about it, so this was my first time talking about RHP and subscription trends and everything. So it was like more knowledgeable to me. It added to my
Okay.
like knowledge and everything.
And you also studied about the forex and other things also. So those were also, how did you find that?
Yes, so that's what I'm saying. Even I didn't study about forex before, so it was my first time studying, and it was quite clear from the starting.
Okay.
So I like the subject. Yeah.
Good. Okay, go ahead now.
Coming to the next slide. So first day stock performance, listing and initial performance. Swiggy share debuted on November 13, 2024 at 412 rupees, representing a 5.64 premium over the issue price of rupees 390. Analysts had predicted a flat or slightly discounted listing due to concerns about loss in competition, but the stable opening exceeded their cautious expectations. Market behavior. The stock maintained stability around its opening price throughout the day, reflecting a muted but steady investor response. No significant price fluctuations were observed, highlighting a balanced demand and supply equation on the listing day. Talking about the key metrics, market capitalization, rupees 92,224 crore with a free float market cap of rupees 8,300 crore was there. Trading volume stood at 6.6 lakh shares with a total trade value of rupees 27.18 crore. Coming to the next slide. So, what analysts thought? They identified strengths through Swiggy's brand recognition, which is among top 25 in India, leading in consumer spending on hyperlocal commerce. Analysts from SPS Securities and KR Choksey praised Swiggy's strategic focus on quick commerce, expansion of dark stores, and consistent growth in average order value. But they also highlighted some challenges. First being concerns over profitability, high operational cost, and intense competition from Zomato and other tempered enthusiasm. Second, Swiggy's reliance on discounts and promotions for customers retention presents a potential risk to long term margins. At last, the market trends, analysts recommended a cautious approach, suggesting investors wait for the stock price to settle before investing further.
Okay.
Next slide. So the final insights of the market sentiment was Swiggy's IPO reflect a broader trend for tech companies prioritizing growth potential over profitability when entering public markets, while the muted debut at rupees 412 exceeded cautious expectations. It lagged behind the more dynamic listings of peers like Zomato. The stable first day performance demonstrates market confidence in Swiggy's long term growth strategy despite short term challenges.
Uh, can you hear me?
Yeah, Dhruv.
So coming to the valuation analysis of Swiggy. So here I'll be looking at their starting with I'll be looking at their overall financials. So Swiggy, I'm comparing 2023 and 2024 financials here. So these are some key items in their financial statements. First is their revenue, which grew from 8,700 crores to 11,600 crores, and EBITDA and profit actually improved from last year, where their where their loss has actually reduced from 4,179 crores to 2,350 crores.
Almost like 50% reduction in both,
Yes,
loss.
yes.
Either EBITDA or profit. Okay.
Next are these key ratios which everyone wants to know when they are looking to invest in an IPO. So I'm here comparing the pre-IPO and post-IPO. So pre-IPO is basically the cutoff price Swiggy had, and that was the upper limit of the price band. So it was around minus 36.44, and of post IPO it was minus 38.72.
Okay,
This was
Dhruva. Actually,
yes.
the P ratio should not be calculated because in this case the P is not applicable because there's nothing called minus P ratio. Okay, and then you should calculate the some other ratios like price to sales or something other ratios which are because the sales are always positive and you can see the price. Okay, or maybe price to book ratio as you have done it here. Okay, so other
Okay.
ratios are more relevant rather than the P ratio here because these P ratio is not at all because company is not making any profit. Okay,
Yes, sir.
ठीक just go ahead because then ratios you can always redo and just send me the numbers. So just look at some other ratios like price to sales ratio or something. Okay,
Okay, sir.
and price to book ratio is fine, and
Uh,
EPS is of course negative. Fine. Okay, go ahead.
Okay, sir. So coming to the price to book ratio, even though the reason the price to book ratio actually fell down post IPO is because the equity percentage in their balance sheet actually increased. So that is the reason the price to book ratio actually decreased, which actually another reason it actually encourages the investors saying that this is actually a little undervalued, and EPS was around minus 10.7 for Swiggy. So when you're comparing, when you're analyzing companies like this, so you'll see there you'll have different ratios rather than these common ratios. And now I'll be comparing Swiggy and Zomato for their food delivery and their quick commerce numbers. So when we are looking, first we'll be looking at their average order value. Now we know that quick commerce is actually growing faster than the food delivery segment. So we can see for Swiggy it is Instamart and for Zomato it's Blinkit. So the average order value for Swiggy is 487 compared to Blinkit of 625. So here comes the actual profitability difference. So I'll give you an example where, let's say, out of this 480 rupees, your raw materials is around 400 rupees. So 87 rupees has your margin, where you'll be paying your delivery guys around 60 rupees. So you will be having 20 rupees as your profit margin. So if you
Hmm.
compare it to Blinkit, that 20 rupees is it's not 20 rupees, rather it's more than 20 rupees. So your profitability in Instamart and Blinkit actually comes here. So the companies actually try to increase their average order value, and Blinkit has already done that. And for the whole year ending quarter 1 25, Blinkit had a sales in quick commerce of 4,923 compared to Instamart of 2,724. And the take rate, which is mentioned here, is basically the percentage of commission Swiggy or Zomato takes from the consumers of their order value. So here it's 19.1% for Blinkit and 14.8% for Instamart.
So you want to say that when the customers are paying almost 20% markup on whatever they are buying from Blinkit.
Oh, yes, sir.
Okay, and whereas Swiggy it's about close to about 15%.
Yes, sir.
So that means Swiggy is giving more discount compared to Blinkit to their customers on the items which you buy from them. Is it?
Yes, sir. Actually, Swiggy has a lower market share than Blinkit, so they are giving discounts so that they can gain that market share.
Okay, and this kind of discount is reflected in the average order value also because it's about 487 there, it's 625.
Yes,
So
sir.
so since their margins are almost like 5 to 6% less, so that would be one of the reason for the order value to be lower. Okay,
Yes, sir.
and are they
Uh,
operating like like Swiggy and both Blinkit? Are they operating in the same kind of a segment of markets or different markets?
Oh, they're same market, sir. So they literally deliver the same products. So they're
Okay.
just competing on their
So is there any
delivery time.
slide basically which talks about the coverage in terms of how many towns cities Swiggy is covering and how many towns and city Blinkit is covering? Is there any information here? No.
So we don't have it here, but we can add few slides for that as well because our slides were already like
No,
going too
no, no
much.
issues. No, no, because that was not, though it is not part of the IPO. But anyway, just wanted to know that you have any slides, like how many, what's the reach of Blinkit and Swiggy. That's the only purpose. Okay, fine. Go
Sir, I
ahead.
have an estimate if you would like to know that Swiggy is more dominant on the southern part of India,
Okay,
and Blinkit is more dominant on the northern
north
side.
part of India. Okay.
So that's the
So Swiggy
difference.
is basically the promoters are from south, or I mean they are also from north, as Zomato
Uh,
seems to. Huh?
so their base is in Bangalore. So they started off the business in Bangalore. So they have a stronghold
Stronghold in south is
in south
Swiggy.
side.
Okay, and Zomato is basically a north Gurgaon based promoters.
Yes, sir.
Okay, chalo go ahead.
So coming to the dark stores, again, dark stores, as explained before, are very essential for quick deliveries, which Swiggy and Zomato claim for. So actually, in last year, Swiggy had more dark stores than Blinkit, but if you see now, Blinkit has more dark stores than Swiggy, which is at 639 compared to Swiggy's 557, and the revenue generated per dark store is also very high for Blinkit, which is at around 7.7 crores per dark store compared to Swiggy's 4.89 crores per dark store.
So that revenue generated per dark store. Dark store is basically where they, stores where they are keeping all their stuff to be from where it is delivered, isn't it?
Yes, sir.
So revenue generated per. So these are the dark stores they're having. Okay, fine. ठीक है, चलो, got it.
Coming to the food delivery segment, Swiggy has an average monthly transacting customers of 14 million, and compared to Zomato 20 million. So this is actually the people who are ordering from Swiggy and Zomato actively
Hmm.
in a year. And coming to the revenue in this segment, we can see that Zomato here also has more than Swiggy, around 9,200 crores compared to 6,800 crores for Swiggy. And the take rate here is higher than compared to your quick commerce because this is an established market where it's already been going on for 5-6 years, and people are used to the convenience. So that's why the take rate here is higher than quick commerce, where there's a lot of competition and the market is still maturing.
Okay, good. Go ahead.
Uh,
Next.
and now looking at, was the IPO fairly valued? So to know if the IPO is fairly valued, let's compare the only stock which is listed in the stock exchange, which is Zomato in this market.
But
So the
Dhruva, you could have compared, some international players also, like Do Dash or something. There, I think there's some companies which are there, which can be compared with, both Zomato and Swiggy. If we have, some international players. So वो करा है आपने कुछ नहीं करा.
Sir, actually, I thought about that. The thing was, both are in different markets. They'll have different costs
हाँ वही.
and they'll have different income people. So that's why I thought it'll be good if I compare Zomato and Swiggy because we can relate to it much better.
Definitely because the conditions are same. But when you just talk about the foreign players also who are doing almost a similar business, so you can always compare them. Okay, you can. We know that there could be some similarities and some. I mean, not. So, but we can still talk about those, and it makes the presentation much more better. Okay, so that was the only purpose. ठीक है, कोई बात नहीं, अभी नहीं करा तो ठीक है. So you have just compared this because there are only two players, okay, and they are also got recently listed. Okay, now the players abroad they might have got listed about say a couple of years or 5 years, 10 years back, or 3 years back. Okay, but एक चीज है, like you don't get such kind of players abroad so easily because there the labor cost is so high. So I mean, they don't deliver at home basically. Okay, okay, so they can deliver at a point from where you have to pick up the goods, like in England, which happens like that.
Okay, sir.
So ठीक है
Uh,
चलो आगे चलो.
so I'll be visually representing the difference between Zomato and Swiggy and how big Zomato and Swiggy are compared to each other. So we can see just by the numbers, we can say that Swiggy is a smaller business than Zomato. Uh, so coming to the quick commerce segment, Zomato's average order value is 28% higher and revenue per dark store is 57% higher, which is significantly higher than Swiggy. And this is where they're actually making their profits from. And the food delivery segment, the active monthly transacting users is 44% higher for Zomato, and the revenue is 36% higher for Zomato. So we can clearly see that Swiggy is actually a smaller company than Zomato. So we have to keep that in mind when we are valuing the company. And Swiggy is still a loss making company while Zomato recently turned profitable. So that 88,000 crore valuation 88,000 crore valuation Swiggy is asking is kind of justified. And when we are coming to valuation, the numbers are not the only thing we are going to see. So there are some qualitative aspects as well. So they are like Swiggy still has a huge risk in their quick commerce because Blinkit had their first mover advantage, and Swiggy still needs to incur a lot of marketing expenditure to keep itself in competition and maintain its market share. And actually, rather maintaining, it should actually increase its market share to keep itself in competition. And one interesting fact that I got to know while doing research for this is Swiggy was had a solid base in the southern India in its food delivery and its quick commerce segment. But recently, in the last 2 quarters, it started losing market share to Zomato in those areas, which is a big hit because that's where Swiggy was actually strong in.
So how
So if
that happened basically? How they could gain foothold in South? I mean, when already Zomato, I mean, Swiggy was there.
Sir, so Zomato had this huge capex investment in South India to expand their dark stores. So
Okay.
that's why we could see in the data where they had significant increase. They almost doubled their amount of dark stores, and which in that increase, more than half of them were in South India, and they had almost 50% increase in their marketing expenditure for Zomato.
Okay.
So that was all done in South India. So that's why Swiggy started losing its market share to Zomato in the food delivery business in South and its quick commerce.
Okay. Good. Very good. अभी आपका हो गया. Next, who is going to present?
Sir, I have like 2 lines left. I'll
Two more
complete it.
slides. Okay.
And Swiggy is right now relying on its strengths, which is its customer base in South, which it still has around 40%, but it's losing its market share where it had 50% 2 years back. So this all these qualitative and quantitative quantitative methods where we can see that the 88,000 crore, which is slightly at a discount compared to Zomato's 2.5 lakh crore valuation, it actually justifies it.
Okay. Good. Very good. So now your part was valuation. So that is over, isn't it?
Yes, sir.
ठीक है. It was a good. You covered very, very well.
Thank you, sir.
And Dhruv Prakash, you are from which part of the country? You are from South or North?
Sir, I'm from South India, sir. I'm from Andhra Pradesh.
Andhra Pradesh. Okay, great. So this course was, I mean, did you find it good, or I mean, what was your reaction? And this thing about it?
Yes, sir. This course was quite informative, and the projects and the assignments we did, I learnt a lot and could actually relate to what you um taught us in class. So
Okay.
that actually helped me learn and do the presentation
Were you
better.
attending the class regularly, or you also Saturdays you are also, most of the time missing the classes?
No, sir, I was right there.
Okay, you're there. Okay, good. ठीक है. Next.
Coming to the competitive landscape, Swiggy has. Can you move on to the next slide? Yeah, Swiggy has different competitors because it serves in different segments. And coming to the food delivery, direct competitors include Zomato and QSR chains. And out of consumption, it's Zomato and Easy Diner. Quick commerce, it's Blinkit, Zepto, and BB Now, which is by Big Basket. Next slide. Yeah. So to talk about Swiggy's positioning, one is that it is described as a market leader in monthly gross order value per average monthly transacting user within the food delivery space. So this highlights its ability to drive higher customer engagement compared to competitors. And it is also an integrated ecosystem. Swiggy's unified platform strategy, offering food delivery, quick commerce, and dining out services, is what differentiates from its competitors. So, this broad service offering enhances customer stickiness and positions Swiggy as a comprehensive hyper local commerce platform. Brand value, Swiggy is recognized as one of India's most
So
valuable.
इसका क्या मतलब है comprehensive hyper local commerce platform Swiggy as a
So, So hyperlocal commerce platform is where it's basically taking up goods from one store and delivering it. So
okay.
this model, business model is called hyperlocal commerce.
Okay, so the name of the this business model is hyper local. Okay, good.
Yes. So Swiggy is also recognized as one of India's most valuable consumer technology brands. So this emphasizing its strong brand equity in competitive market.
Okay.
Next slide. So this company also leverages, AI and machine learning to optimize delivery operations. For example, it maximizes fleet utilization by integrating both food delivery and quick commerce services. And through initiatives like Swiggy One, which is a membership feature given by Swiggy to its customers, this positions the company as a leader in customer retention. Swiggy has maintained a robust market position despite intense competition, so it positions itself as a pioneer in the hyper-local commerce platform.
Okay.
Next slide.
Acha, just hold on, Malaika, just go back.
Yes.
So when you say the company leverages AI and machine learning to optimize delivery operations, so what do you mean? Can you elaborate a little bit?
Yeah, so one of the key differences when it comes to Swiggy versus other players is that it's all integrated. Like the food delivery and the quick commerce is integrated. It's all in one app.
Okay.
So, say someone places an order for food delivery, and there's also a nearby order placed for quick commerce, say from a Kirana store or something.
Uh,
So, they use the same driver or the vehicle to collect both the orders, which is
okay.
not the case with other apps like Zomato.
Okay.
Yeah.
Okay, got it. So go ahead.
Next slide. Yeah. So as Nyasha has already talked about how Swiggy is utilizing that proceeds, I will talk about how exactly it improves its competitive position. So one point is that it's utilizing its proceeds for processing and packaging. It plans to utilize the IPO proceeds to invest in a subsidiary, Scootsie Logistics, for repayment of borrowings, expanding its dark store network, and funding lease payments. So these measures aim to strengthen Swiggy's quick commerce segment. Swiggy will also invest 7,034 million rupees to enhance its technology stack and cloud infrastructure. This improvement is expected to increase operational efficiency and scalability. IPO proceeds will also fund initiatives to enhance brand awareness across segments. The company aims to leverage marketing campaigns to attract and retain users, partners, and increase engagement. The RHP also outlines about Swiggy's strategy of leveraging IPO proceeds for growth, including geographical expansion, product diversification, and targeted marketing. Next slide. So now let's talk about the risk factors and challenges that are also mentioned in the
So
RHP.
risk, you got this from the RHP, isn't it?
Yes, yes, sir.
Okay.
So one key risk they mention is dependence on retention and acquisition of users and partners. Challenges in retaining existing users and acquiring new ones, as well as attracting and retaining delivery partners, restaurant partners, and merchant partners could adversely affect the business. How is it of significance for investors that failure to attract these and retain customers could affect revenue growth and stability? Second one is that operational and technological challenges. Uninterrupted functioning of Swiggy's platform is very essential. Issues like system failures or bugs could disrupt services and harm user trust.
Okay,
This
Malaika, just tell me one thing. When your exams got finished, I mean, which you're having, which date?
uh, on yesterday.
Yesterday. So, how did you get time basically? You just prepared it before or after the exams, or?
So I've done this before the exam.
Acha, you're done before the exams only. Now, this,
Yeah.
you're just, yeah, okay, that's good.
Okay.
And how many exams were there?
We had 5 exams.
Five. And overall, how many subjects did you study this semester?
We've done 7 courses.
Huh? Six.
Six.
So, out of six, this was the only which was, take home or something which you could
Yes, sir.
do it. Other were all, you had to give, I mean, paper
Yeah,
there.
in paper.
So, which you like the most? I mean, giving this way or in paper form?
The takeaway paper is better because I think we
Yeah.
apply more
You
whatever
do
we
what?
we practically apply whatever we learned in the course. But when it comes to paper, it's mostly theory.
Yeah.
So
So, is
prefer
it
take.
paper more or this format better?
This format is better for.
Acha, I thought you were saying paper is better.
No, paper is mostly theory, which most of the people
Most
don't.
theory big was you just mug up everything and then you have to remember everything and then put it on questions which are there.
Yes, sir. This is more useful.
So why don't the other professors do go for this? I mean, why most of them go for the original? I mean, the traditional format of taking end-term paper.
So they already take projects and stuff, so I think they don't prefer taking another takeaway assignment. So
Okay, so some part is basically where you have to do those projects also, is it? Part
yeah,
of the this
yes,
thing. ठीक है, चलो, go ahead.
yeah.
So how
Next
was the
slide.
subject for you basically this time? This subject.
Sir, it's useful. Like I've done previous courses also,
Hmm.
but they don't actually teach enough basics to start with. They just jump onto the in-depth topics without teaching the basics. So in this course, the foundation is very nice.
Okay. But only thing is that, this time I found out of all the, years which I've taught here, many students were not there. Of course, you were always there. I mean, Malaika, Navya, I think, and Ananya, and even, Janardhan. But many students were missing because it happening was on Saturday, is it? Because of that.
And also, most of the students are from fourth year, so they have their placements going on.
Okay, so because of the placement, so they lose basically. They give more focus to the placement, and
Yeah, yes, sir.
I know because it happens basically. When you teach MBA students, the final year, most of the students are missing the classes because they are more worried about getting placed
Yes,
and
sir.
look for those kind of. They're more focused toward that. Okay,
Mm.
go ahead please. Next. So आपको भी placement के लिए नहीं था अभी अभी there is one more year to go.
Yeah, next year. Yes.
Next year. Okay, okay.
Next slide. Yeah, so profitability and cash flow. As I've already mentioned, that Swiggy is currently in losses. Failure to achieve adequate revenue growth and manage expenses might result in continued financial strain. So, Swiggy's ongoing losses present a financial risk as delayed profitability could lead to investor uncertainty.
Okay.
Legal and regularity risks. Litigation risks, including those related to GST show cause notices for tax liabilities, may impact financial and operational performance.
Okay.
Potential legal issues such as tax liabilities could result in financial penalties and damage Swiggy's reputation.
Okay,
Next
but
slide.
you said legal, just hold on. Legal and regulatory litigation risk, including those related to GST show cause notice for tax liabilities, may impact financial and operational performance. But again, you have to meet, the regulatory, this thing. You have to file all the returns of GST and you comply with the
Yeah,
law.
but again, when there's a show cause notice, it's also like a damage to reputation, right? So that is what they're trying to say in this.
Okay, so anyway, we'll not dwell on that at the moment. So,
Yeah.
ठीक है, इसको next term, next semester we are going to study about what is GST. Okay, so we'll talk about that.
Yes, sir.
Okay, fine. So, next.
Next. Yeah. Management of dark stores. Effective management of dark stores is critical for any quick commerce segment. Inefficiencies could lead to affect operations and profitability. For
So
investors,
Malaika, just skip all this. Now, you have any more risk after that? Six
there
crore.
are external risks, but now we are going to talk about that.
हाँ चलो नव्या पे चलते हैं हम जो है.
Yeah. Okay.
Navya has already presented. नहीं, Niyashi has presented, isn't it?
Sir, I have presented. I'll just speak about them in a few
अच्छा, you have
minutes.
already presented, huh? And uh, Navya, you have already presented, na, earlier.
Yes, sir.
Who has not presented?
Sir, JD and Ananya's portion is left.
अच्छा, तो हम उस पे चलते हैं अब, because time, is running out. So external risk. So you can just show me intense market competition, as you're saying, economic and macroeconomic factors, and regulatory and legal changes. Okay. Any changes in law? Fine. Next. Dependency on external service providers and geopolitical and environment factors. Okay. Next.
So I will talk about the corporate governance.
Okay.
Compliance, next slide. The compliance with SEBI listing regulation. Upon listing, Swiggy must adhere to SEBI regulation for corporate governance, which require transparency in reporting, disclosure, and financial accountability. Swiggy board of director consists of 10 members, two executive directors, 8 non-executive director and 4 independent director, including one woman, to ensure diverse perspective and independent decision making.
अच्छा अनन्या ये जो आपका है the corporate governance is basically, as we see, there's a listing regulations as well as the Companies Act. So this is the LODR basically you're talking about, isn't it?
Yes, LODR of 2015 that was mentioned in AHP.
I just briefly covered the fag end of the course. Okay, so okay, fine. You say that the board composition is exactly as per the compliance the regulations, which allow how many directors, how many executive directors, and how many independent directors they should have. Okay,
Yes, sir.
fine.
So for board committee, the next slide. To
Okay.
uphold governance, Swiggy has established the following key committee. First, the audit committee. The chairperson is Shailesh. He's overseeing the financial reporting, reviews auditor performances, and ensure accuracy in the company's financial statement. Whereas the key task reviews the use of IPO funds, related party transaction, and internal control system.
So, do you have any you have you had any idea about the audit committees which companies have in India? I mean, were you aware of that earlier? I mean, have you studied about something about audit committee in any of the subject which you have studied in past?
So last time I took corporate governance, so I had some
Ah, yeah, yeah, corporate governance. So, listing agreement, clause 49, basically, you might have studied.
Yes, sir.
Okay, so that was part of which business ethics and corporate governance, or a separate course?
No, sir, it was a separate course, just corporate governance.
Okay, okay. And if I say the term like Sarbanes-Oxley, so what does it mean to you?
So that we have not studied.
Okay, Sarbanes-Oxley is basically in America, the corporate governance norms. Like we have the LODR in India. So in the world, it was started with Sarbanes-Oxley, Act basically, which was, then only the all these corporate governance things came to India. Okay, so the first country to adopt the law, which was called Sarbanes-Oxley. So there were two people in America who framed the law of corporate governance in America. Okay, fine. चलो आगे चलो. So ठीक है, आपने बताया oversight of financial reporting. So the audit committee is basically, the job is to go through the financial reporting, review the approval of financial statements before they're presented to the board. Then they talk about the internal controls, whether the company has enough internal controls. Okay, evaluation of risk management systems, then policy formulation for related party transactions, and whistleblower mechanism. So what is whistleblower mechanism? Have you any idea?
Sir, if you suspect there's something that is wrong in the company, you can whistleblow to
To
the
the audit
media that
committee,
there's
I mean,
some.
yeah, yeah. So is there any protection given to the whistleblower?
Yes, sir.
Okay. So ये पढ़ा हुआ है आपने ना whistleblower का के बारे में?
Yes, sir.
ठीक है. So ठीक है, चलो next चलो आगे.
For the nomination and remuneration committee, we have Suparna Mitra as the chairperson. Her role is to evaluate and recommend board appointment, director remuneration, and executive compensation. The key tasks ensure that director and senior management have the right qualification and experience.
Okay.
For the risk management committee, the next
Okay,
slide.
okay. So Ananya, this was my first subject which I taught in my life in a college. Okay. when I left my job. So I was teaching corporate governance at that time. The first subject which I took to teach in a university was this corporate governance. Okay, go ahead.
For the risk management committee, we have the chairperson as Sriharsha, whose role is to identify and mitigate operational, financial, and ESG risks with a focus on cybersecurity and business continuity plan. For the CSR committee, we have again Sriharsha, which is to the next slide.
Okay, Ananya, are you aware that when you look at a balance sheet of the company or annual report, so there is a special section which is called the corporate governance report,
Yes,
which
sir.
is to be submitted by the company secretary. I mean, talking about how many independent directors they have, what is the composition of audit committee and how many times they have met in a year, board and everything. So, have you ever gone through that kind of a report of a company?
Yes, sir. Like for the independent directors, there should be two minimum independent director and one
Yeah.
female director. That is what they're adhering to.
Okay. चलो ठीक है आगे चलो.
For the key areas of corporate governance, that is transparency and disclosure, Swiggy must disclose financial statement, operational results, and major business development quarterly, as required by SEBI and stock exchange. Shareholders are kept informed about the utilization of IPO proceeds, risk factors, and business strategies. Whereas the investor protection, shareholders, both institutional and retail, can raise grievances through the stakeholder relationship committee. Fair treatment of shareholder ensure equal right for minority and institutional investors alike. And for the risk management and internal control, Swiggy Risk Management Committee identifies and mitigates risks such as cybersecurity, data privacy, and operational disruption.
अच्छा,
For the
just one question, okay? Can you talk about any internal control which a company has? I mean, कोई internal control के बारे में पता है क्या होते हैं वो? I mean, when the company set up internal control procedures, can you talk about one of the internal control procedures? Of course, it is not part of the subject, but if you have any knowledge.
So, like about the ensuring that there is accuracy and reliability and timing of the information. That is what you're saying, preventing fraud and improving operational efficiency.
Yeah, yeah. There are a lot of internal control systems which are established by the company. Particularly, generally, it is most of them they are related to finance. So it's a job of the CFO to see that all the internal controls are in existence, so that of course there is no event of any fraud, or I mean it can detect all those things. Fine. So the most simplest one would be that the bank companies performing a bank reconciliation, or getting suppliers confirmations of their balances or debtor confirmation. So these are all mechanism through which or there is a periodic stock taking which is happening to ensure that the company has or has all those stuff in there which they are showing them in the balance sheet. They are physically there. ठीक है चलो आगे नेक्स्ट.
So, JD will take over.
Yes, sir.
उसके
Sir,
बाद कौन
so
बचा है?
I'll
आई
be
मीन
doing.
जेबी के बाद कोई बचा है?
No, sir.
ठीक है
I'm the
चलो
last one.
जेबी. ओके, फाइनेंशियल
Yeah.
परफॉर्मेंस एंड ग्रोथ. सो यू हैव गॉट 10 minutes to go. Okay.
Yes, sir. So what we did was we got the
You know,
data.
what you have done a very good thing, that you have joined, these people along with, Malaika, Navya, Ananya. So this will, be very good for you basically, okay? Because you know that, your group is going to get, so far this is the best presentation I have seen, okay?
Thank
Right?
you,
You
sir.
are all well prepared, and it is going to help you basically. Balaji?
Thank you. Okay, sir. Thank you, sir. So, so we made our Excel using Screener. So we got, because Swiggy just got listed, we only have 4-year data for Swiggy. So we made an Excel sheet, and these are screenshots from the Excel sheet.
Okay.
So when we look at sales, we see that there is a steady decline in sales rather from 2022. And when we look at COGS, it has been again decreasing since
No,
2022.
just to show me historical. I mean, the sales was 2,000, then 5,000, then so sales have been increasing, isn't it, Swiggy?
Sir, they have been increasing. Sorry, I meant COG, like I meant COGs were decreasing. Sales have been increasing.
Okay.
COGs have been decreasing. I was talking about the growth, year-on-year growth. Like
Okay.
when we see 2023, it was 44%, and 2024 was again
Ah, of course,
46%.
as the company becomes bigger and bigger, and then I mean, the revenue goes up, so
Yes, sir.
definitely the sales growth will taper down. It can't
Yes.
keep growing at 100% or for 50%. So maybe another 2 years down the line, the growth will happen to be just 10 to 15% the top line.
Yes, sir. So now, if we look at it with a graphical representation, this is how it looks. When we look at sales and COGs, we realize that COGs, there was a decline in 2023, and same way, which implied that the gross profit also started increasing in 2023. There was a
Okay.
sharp
Yeah.
increase.
Yeah. Yeah.
Now, if you look at the other profitability metric, which is EBITDA, we see that it has been again increasing in the sense that it has been going towards the positive direction over these years. And when we look at it using a graph, can you go to the next slide? Yeah, when we look at it using the graph, we again see that it was declining till 2023, and again it started going up since 2023.
Okay.
And the other financial metric is EBT, which is our earnings before tax. Again, this has also been going to the positive side, and we look at when we look at it from the graph perspective, it looks similar to our EBITDA,
Just show
which
me the numbers, EBITDA number.
yes,
Have they become positive? I mean, somewhere
not yet, not
not
yet.
yet.
So they're going toward the positive direction.
Okay, so they were 1200 to 2000. Okay, now
Yeah,
it was 4000, now 2000.
like
Okay.
since 2023, it has increased.
So, but generally, it was that at EBITDA level, most of the companies are supposed to be positive. Okay, but
Yeah,
unfortunately, this company is still negative after so many years of operations.
yes, sir.
Okay, fine. Okay.
Yeah. So yeah. Now go to the last financial. Yeah. So the last metric would be our net profit, and our net profit again has been increasing toward like going towards the positive direction since 2023, and this is how their cash flow looks like. Now, if you look at it using the graph, again our sales and EBITDA look. Go to the graph, please. We realize that all of these graphs show a spike in 2023, which like all the profitability metrics have started to increase in the year 2023. Now, when we look at the growth drivers for Swiggy, first is that expanding services beyond food delivery. Swiggy has its Instamart and grocery delivery, which has diversified from its original business. And it also has Swiggy Genie, which is offering pickup and drop services for personal items. And it has, like we discussed, it has a hyperlocal delivery model where it's delivering to tier 2 and tier 3 cities. And it also has cloud kitchen initiatives where it's investing in cloud kitchens under the Swiggy access. So cloud kitchens are nothing but commercial kitchens that make food for takeout or delivery.
Okay.
The third one is the customer centric innovation. Swiggy is offering subscription plans such as Swiggy One, which offers further discounts and free delivery up to a certain distance. And it has started to focus on its quick delivery as well. Now, looking at the industry trends, we realize that since COVID-19 and after that, there has been a growing appetite for online food delivery, and that shift has sort of helped Swiggy and Zomato in one sense due to
Okay.
COVID. Now, when we look at the targets, realism of targets, we see that Swiggy's revenue has been growing steadily over the years, and its revenue growth looks realistic and appears realistic, and it could possibly keep on increasing over these years. But when we look at the profitability, Swiggy still faces high costs in logistics, and it could slightly be a problem for Swiggy to go to the profitability area, but it is still approaching that phase.
Okay.
Now, looking at the impact on industry and market dynamics, we realize that a successful IPO of Swiggy sort of boosts confidence in the business model in itself. So, in one sense, in India itself, there has been an increasing investment in potential food delivery startups, and the market sentiment also looks good for this industry.
Okay.
We look at the competitive realignment. As a public company, Swiggy will be sort of pressurized to demonstrate consistent profitability and will sort of lead Zomato to prioritize cost efficiency. So there will be sort of like a friendly competition, which will help the companies improve in one sense and help better price discovery.
Okay.
When we look at trends and benchmarks set, now since Swiggy's IPO, people will get sort of a better clarity on how food delivery platforms have to be valued. They'll get better idea on metrics such as gross merchandise value, which is the company's sales over a period of time, and customer acquisition cost, which is how much you have to pay to acquire a new customer. And
public company accountability. As a public company, Swiggy will have its obligations to sort of adhere to strict guidelines where people will get to know how they operate in a better fashion way compared to when they were still private.
Okay.
Like,
Is this
now,
your last slide or anything more
yeah,
to
so
it?
this is the last slide.
Yeah.
So, investor interest in future IPOs. So, a successful Swiggy IPO has sort of increased the investment in this sector, and it can possibly act as a catalyst to sort of other IPOs where cloud kitchens also we can see and logistic companies come for an IPO. So, that could catalyze these IPOs in these industries as well. That's it.
Okay, so that's over. So you are Ananya, Dhruvakarsh, Janardhan, Balaji, Dalika. Okay, fine. So now of course, this was the one of the best presentation, and you have presented very well. Okay, and I'm just going to close the recording now.